watching Chairman's Briefing, and this episode is brought to you by First Mining. I'm Rachel Lee. Let's get started. President Donald Trump announced sweeping global tariffs earlier this week, fundamentally reshaping global trade relationships in a move that sent gold prices soaring to unprecedented heights. His executive order imposes varied tariff rates, from a 10% baseline across all imports to targeted rates as high as 46% for countries like Vietnam and 34% for China. Trump described this action as fulfilling a 4-decade personal mission to address what he characterizes as unfair trade practices. Gold responded dramatically to this policy shift, reaching a record $3,201.60 per ounce in aftermarket trading following this announcement. Gold's rally reflects investor concerns about inflationary pressure and economic uncertainty resulting from what economists call the largest and sudden tax increase in American history. Political leaders and economic experts in Germany are concerned over the nation's gold reserves that are stored in United States vaults. Germany holds the world's second largest gold reserves and stores approximately 37% of it at the Federal Reserve Bank of New York. The asset is valued above 100 billion euros. In the face of deteriorating U.S. and EU relations, several prominent voices advocate for immediate repatriation of these national treasures. Michael Yeager is from the European Taxpayers Association, and he emphasized the need for immediate access to all gold reserves during this period of global uncertainty. At the minimum, the government should conduct a review of the reserves held in the U.S. and even do a physical test on the gold bars, said Yeager. Now, despite these concerns, Bundesbank President Joachim Nigel maintains confidence in the arrangement between Germany and the U.S., describing the New York Fed as a trustworthy partner. The situation highlights growing tensions between traditional economic alliances and emerging geopolitical realities that are affecting precious metals markets worldwide. Endeavour Silver announced a $145 million acquisition of the Colpa mine in Peru, adding a third producing asset to its portfolio. Now, this purchase is expected to increase the company's annual silver production by 5 million equivalent ounces. The deal includes $80 million in cash and $65 million in Endeavour shares. To fund the cash portion, the company secured a copper streaming agreement with Versamet, which is a royalty company created through a partnership between Sandbox Royalties and B2 Gold. Additionally, Endeavour launched a bought deal financing. This is where investment banks purchase shares up front at a fixed price before reselling them to investors. This acquisition expands Endeavour beyond its Mexican operations and advances its goal of becoming a leading silver producer. The Colpa mine has permits pending to increase processing capacity from 1,800 to 2,500 tons per day, suggesting potential for future growth as Endeavour diversifies its portfolio. Collective Mining is scaling up exploration after securing 63.4 million Canadian dollars from Agnico Eagle. This strategic investment increased Agnico's ownership to 15% of the company. Now, the financing enables deployment of 10 drill rigs to complete 70,000 meters across 2 Colombian projects in 2025 for Collective. Collective Mining will allocate up to 8 rigs to the Guayabales Project, which is anchored by the Apollo system. Apollo hosts a large-scale deposit with multiple styles of gold, silver, copper, and tungsten mineralization. Recent drilling yielded impressive results of 106 meters at 9.05 grams per ton gold equivalent. Specialized rigs that are arriving in June will test deeper zones at Apollo. Drilling continues at the separate San Antonio project. 2 new diamond drill holes have been completed in 2025, with a 3rd hole currently in progress. Now, this 2-project approach positions Collective Mining to potentially define substantial resources across multiple Colombian gold targets. First Mining Gold has received the final $5 million payment from First Majestic Silver completing their silver streaming deal for the Spring Pole Gold Project in Ontario. This payment was amended to be paid earlier by March 31st, 2025, and wraps up an agreement made in 2020, where First Majestic gained rights to the silver produced from Spring Pole in exchange for payments. Now, for investors, this payment demonstrates the strong endorsement and confidence by First Majestic Silver and marks a positive financial milestone for First Mining as they continue developing their flagship gold project, showing that they can successfully generate non-dilutive proceeds while maintaining ownership of their core mining operation. First Quantum Minerals has withdrawn one arbitration case and suspended another against Panama, clearing a path toward potential negotiations over its closed Cobre Panama mine. This shift addresses a key demand from Panamanian President Molino, who insisted arbitration must end before any discussions could begin. The mine is worth $10 billion and has remained closed since December 2023, following widespread anti-mining protests. The operation previously represented 5% of Panama's economy and 40% of First Quantum's annual revenue. The company reiterated that it remains committed to dialogue with the Panamanian government as both parties seek resolution. Canadian Prime Minister Mark Carney has embraced the mining industry's long-sought goal of eliminating duplicate environmental reviews. The new One Project, One Review approach aims to streamline approvals by recognizing provincial assessments without additional federal scrutiny. The Mining Association of Canada has identified permitting delays as a major investment obstacle, with projects often facing decade-long approval timelines. Now, this regulatory duplication is not seen in other countries and places Canada at a disadvantage. Carney also unveiled a first mile fund for transportation infrastructure connecting remote sites and a $175 million investment in Churchill's port facilities. Policy analysts note that effectiveness with implementation is important here, and that continued Indigenous consultation requirements will determine the plan's ultimate success. The red-hot copper market could soon face a dramatic reversal, with French bank BNP Paribas predicting that prices will collapse from current near-decade highs. Now, the French bank foresees copper plummeting to $8,500 per ton by June, which is a 15% drop from recent levels above $10,000 per ton. This bearish forecast comes as the frenzied rush to ship copper to American shores ahead of potential Trump tariffs nears its conclusion. With hundreds of thousands of tons already en route and tariffs potentially arriving within weeks, the window for this strategic stockpiling is rapidly closing. Now, while we're optimistic about copper's long-term prospects, the metal's impressive rally appears increasingly vulnerable as global supply fundamentals begin to outweigh short-term tariff concerns. And there's your briefing for today. If you're not subscribed yet, please do so before you go. I'm Rachel Lee, and we'll see you next week.